Hi, this is Randy Finney with Right Side of the Chart, and this is a late session update for Wednesday, May 25th, 2022. It is 2:55 p.m. Eastern Time. I'm starting a video, so just over 1 hour to go in the trading session, and I just wanted to do one more update, get the video out to you, because I think there's money to be made right now, and that's when I will increase the frequency of my updates, even if it seems repetitive. Key levels to watch, and of course, I won't do a video unless there's something new to add in that I left out. So what we're going to do in this one is talk a little bit about NVDA and just reiterate the same levels I've been highlighting that I think the really big levels have taken out. I don't mix words. I think the market can run pretty hard if 294 is taken out on QQQ, but we need to take that level out. So that's it. This is just a 5-minute chart. If I fail to mention what time frame we're talking about, it's usually up here in the top left-hand corner. And like I said earlier today, let's ideally we keep above each and every one of these reaction lows. It doesn't mean the bottom's going to fall out if one of them's taken out, but and at this point too, you have a nice trend line, a potential trend line. So really, I want to see that hold. And then if that gets taken out, you have these other reaction lows and then the low right there. So it could get a little choppy with NVIDIA. NVIDIA can go either way. I'll get to NVIDIA in a second. We'll talk on that chart. But there's the levels to watch. 294, set your price alert. Unless you're watching it, watching the charts if you have time to sit in front of them. And then let's look at the futures real quick. NQ. This is a 10-minute chart right here on NQ. I've been showing you the 60-minute chart lately. And we just took out, we had that gap. That was that gap that happened, I told you the other night in the after-hour session. That was due to Snap. A little, 24 or 34, whatever billion-dollar company was able to, knock these fangs down over 1%. But we're entering the gap now, and that's rare. You don't usually see that big a gap in the futures unless it's on the over the weekend session. They shut down on Friday night, they pick back up on Sunday night. So this one happened then. And gaps, once entered, are often backfilled. So there it is. There's a gap. We're in it right now. And that should take us up to the top. And then you have, about here it's 12,100, but I'm focused on the 60-minute chart. Let's go down to 1 month view. And that's it right there. So at about 1285 or 12100, give or take, that's the level I think needs to go. And then boom, we could have a nice run in the market. And a nice run can be a quick pop, but at this point in time, I'm more apt if we do break out, if tomorrow is constructive, if whatever NVIDIA reports, whether it's good, bad, guidance, what does the market do? And then there's a time, sometimes NVIDIA can go down and the rest of the stocks can go up. So it's not everything, but sometimes one of the big tech companies, and it is the biggest semi now, I believe. It's bigger than Intel. Intel used to be the leader. And I don't know, I think Taiwan Semi is the biggest one. And then NVIDIA's up there. But either way, there's the level to watch, 1285, 1286 right there. You got a downtrend that comes into play. Zoom out a little bit longer term. You have these charts. I've already posted them on the home page. So there it is. And T3, remember T3, which is what I laid out Thursday before last, just before I left town. That's when we hit that level there. We double bottomed it, little whipsaw, and we've held it like a champ so far, and I like that. If we take it out, then that's not good. I'll change my tune and my positioning quickly. But as of now, we're holding it, and when you look out this far, you see that downtrend line that comes into play. You see T3 is up here, T3 zone. I know it's hard to see in the video. That's about 12,900. The top of it's 12,972. I can see that. And what you have there are quite a few major reaction lows. You have a lot of trades that occurred there, then a breakdown. And so I think that's how it'll play out if we can hold up here. I think we'll run up, maybe check that trend line, validate it, and then move up there. And so again, I've talked about it. I think I'm going to keep saying about a 10% rally is what I'm looking for. That's also the 38.2 Fibonacci retracement. You can't see that here. This chart looks like a Christmas tree because all these fibs, they color the lines differently. But that would be just a run-of-the-mill 38.2, really minimum retracement. Typical retracements on a counter-trend rally run from that 38.2 fib. Here's the 50% fib there and the 61.8. And you could put your own fibs on your chart. Just use that reaction high right here from the end of March right there, it looks like. and then take it down to the low, and the fibs will populate, and that's what you'll get. So there's your potential rally points. If and if the bottom falls out, then it means the fibs really don't come into play, because this is not the low. We're still in a downtrend. All right, ES, already covered ES for you. I think I did 39.82 right there. This is 60-minute chart as well, big level. So if we can pop that, boom, run. And then what else do I have for you? RTY, I think I already covered that for you earlier today. Can't hurt to do an update again, because I like the small caps. They're nice move in them today. Give me 1 second. Here it is. And let me tighten it up a little bit. Well, before I tighten it up, just to reiterate, the trend line I'm working off of, it's a potential target. There's not only 2 reactions so far, really about 3. But that one comes off. Same thing, end of March right there. So that would be a potential target as well. And I'd imagine if I put up some fibs, they'd probably come in somewhere in there as well. Tighten it up. We've taken out the near-term downtrend line right here. Boom. Pop that, back tested it, gave you an opportunity if you missed the breakout to take the back test. And this is where we run hard, I believe. If we take out 1803, boom, it's going to be a, you don't want to be short. You want to be long, in my opinion, if that happens. Again, now let's talk about what could throw a wrench in this whole bull rally thing I'm talking about here, and that would be NVDA. Just like Amazon, this one was a prophetic call. Got in a little early. This is where I posted as a short, but if you recall, and you can check when you click the post I just put on the home page, and you can see this with any post. If you go down to the bottom, it says tagged, and it'll have all the symbols related that are covered in that post. You click NVIDIA, the NVDA ticker, or the tag, I should say, and it'll populate all the posts. I did one update in here, and this is when I was highlighting those bullish divergences on the index, the bullish falling wedges, and I highlighted on the 60-minute time frame as well as the daily. This is a weekly chart, this bullish falling wedge on NVIDIA, and said, you know, if we break out, then you're probably going to run, and that's what happened. So, you know, if you've taken this short here, that's where on the breakdown of the primary trend line, then that would have been an area that, well, first of all, that was first support, 208.68, and then the wedge breakout. So you could have sidestepped it, even gone long, gamed that, and turned around, and then you'd be better than the 35% or so gain that we have from that initial short entry. And it also was not enough to violate a stop based on the final target, not even close. NVIDIA, you know, I know it was heresy back here, you know, calling for these, even that downside target. You know, I turned on CNBC today for a little bit, and they were talking about it. And they, you know, they have no clue where the stock is going, and you know, that's just, I don't know. That one of the guys went long options, one of the ponytails, and you know, he seemed a little nervous. I think the host was saying, well, it's a ballsy trade and whatever. I think he'll get paid, because here it hit that first target, that support. But I'm going to show you something. I would normally reverse and go long. That's what I did with Amazon. NVIDIA, I'm going to sit it out. I also didn't have it all the way down. A lot of times I'll take these trades, I'll get in and out, and I wish I could tell you, I shorted, held it there, and even traded the counter trend rally. But it has been and still is an official trade. You could try to game it here, but again, it's a crapshoot in front of earnings. That's why I suggested to cash out. But there it was. We hit that level. That was on this is a weekly candle here, but it was that Thursday morning when Amazon hit support and all the other indexes. So you've had 3 weeks now. We've been testing that level every day for the last 3 weeks, and this is what's going to have a potential for to move the market. Let me just show you one other thing. On the day after that post from February 3rd, I think it was February 4th, I followed up with a monthly chart, and this is my long-term monthly chart, and I still think this thing's coming to its bull market uptrend line, and that's going to annihilate the stock. It's going to take it down to about when it gets there, it's going to be over a year before we get there, if we get there. And I think it's going to come in around this level. That trend line will come up and up and up, and that's about $32 to $40. I just think they're big part of what NVIDIA makes money on is the crypto market. You know, they sell the GPUs that the crypto heads or miners or people, whatever you call them, that mine for crypto. NVIDIA is one of the biggest, or probably the biggest GPU maker that mines those. You know, they use to mine crypto. So, and the crypto bubbles pop. Bitcoin's down 50%. So But again, this is bear markets play out like this. It's going to be down. I just wanted to mention that we have, on the monthly chart, I have a little more downside here at about 129.04, and then this uptrend line here. That's why I'm not stepping in. So we could bounce here. We don't have to bounce. Probably bounce in line with the market if the market rallies. And later on, we'll take out 129. That'll be the next leg down. That's probably going to come later this year or after the next rally in the stock. Who knows what they'll be. I'll loop back around and revisit this one at the time. But here, this is what I see on the daily chart. I see a nice clean downtrend line right there, ready to pop. And I also have support here. It's not a hard support line, but I do have support down around 147.65. Remember, we hit support in the weekly I had up here, and that's been hit. Also have positive divergence. So my guess is if they do sell off in the after hours or in gap down tomorrow, you can buy it down around there. I'd buy that gap down and or. When I say and or, it means a starter position down to support, and an additional position, bring it to a full position if it breaks the trend line right there. Now, it may just gap up above the trend line. That's going to be good for the market. If NVDA, if the market likes what they're selling, it's going to bode well for the semiconductors. I reversed that too. We were short the semis. Remember, that was one of my favorite sectors on the way down. I give you guys targets on SOXS. I think it was, what time frame was it? Weekly? No, maybe it was the SOXX, and told you that would be the one. Yeah, there it is. On the weekly, it was SOXX. That's the PhilX SOX Semiconductor ETF. Forgetting where the initial short was, but I've been bearish on this one for a while. We broke the trend line there, moving down and hit T1 like everything else recently, and that's again why I covered shorts, 18.5% or so. And there's my T1 first target area right there, more of a zone. We hit it. Like everything else, week before last, again last week, and again this week. So you've had several opportunities. Now here's one other thing that I wanted to talk about. I list multiple targets because the initial tag of each target, whether it's a downside target on a short or your upside target on a long, the initial tag is likely to produce a reaction. Reaction, it's a term I made up, at least the way I use it. Maybe other people refer to that in trading. I'm sure they do. But I define a reaction as a bounce when you're coming down or a consolidation. And if you're going up in an uptrend and it's a resistance level and I expect a reaction can either be you hit it and then you consolidate. In other words, you have a clear trend going up or down. That's the movement. The reaction is, just like if you throw a tennis ball at a brick wall, it's going to bounce back. If you throw a sack of potatoes, it's going to hit the wall and stop, and that's a reaction either way. So this has been a reaction. We've consolidated for 3 weeks. I don't consider it. There was a bounce to be made, but more so of a reaction. Now the question is, are we going to have more of a reaction? Are we going to have a bounce? I'm leaning that way. That's what I think will happen. But this is a bear market, and we've already had 3 weeks where all these key sectors and stocks and even the indexes that I keep talking about over and over, they've hit these levels, have been trading on for 3 weeks. So there's a possibility we could break down, and that's why I say the key word you're going to hear from me a lot in the coming weeks and months is be ready to pivot as an active trader, even as a swing or trend trader, because you don't want to, right now I'm talking about a potential swing trade on the indexes if I'm right in QQQ and SPY and IWM take out those levels. I'm looking at probably a multi-week, possibly even a multi-month bounce trade that could measure into the double digits. That's what I'm positioning for, and I think is about to happen. So even as a swing trader, do you want to ride out a 10? And 10 is just sort of my minimum eyeball target, and that's gotten, maybe was even a little more from the lows. Yeah, about 13% from the lows. Do you want to ride out a 13% bounce? What if we go higher? Yeah, it's kind of sort of my minimum or ideal target is at 13% off the lows. But if we come all the way back to test the 200s, now you might be talking about 20+%. So, somebody asked a question today about stops. There's no one answer. There's no one way. Even my own stops, I tell you what I'm doing. I usually use layered stops like with futures or index or even a stock, like the Zoom today. I'll layer out. I'll take if I have a sizable position, whether I took it in a single lot or multiple lots, I'll layer out. So what does that mean? Like on QQQ or NQ, it means, you know, I showed you the levels, the trend line, the uptrend line. So if we take that out, that's, you know, a half or a third. If I do 3 levels, it would look like this: stop 1, stop 2, stop 3, and then I'm out. But at different times, I might have a hard stop, a single stop, no stops, and you know, it's a very fluid thing. It depends on market conditions, depends on the position, it depends on my confidence in the trade. There are a lot of times during the day I don't have any stops because I'm in front of the computer, I'm watching the markets, but I will not go to bed with, especially with a heavy position in something like any futures, without a stop in place, because I've lived and traded long enough to know something big happens overnight. Shots are fired somewhere, or something happens, or a bank fails overseas and it has ripple effects. Boom, futures can tank and go against you, and so it's only prudent to, because the futures that I like to trade, especially stock index futures, they're liquid. 3 in the morning, I can have a stop loss order. I don't care if the spreads are slightly widened. There's plenty of volume there, and I'm comfortable with leaving on those stop loss orders. So that's that. I covered NVDA, which I did. We'll know after the bell. Don't overreact to the initial reaction because that's often faded, whether it's bullish or bearish. Not always, but often. It's the lasting reaction. We'll see what happens tomorrow. And then finally, just let's do an update on Zoom. That one's just, this is what you want to see in a breakout. This is textbook right here. You know, I told you I picked it up on my radar yesterday because we had a big volume day. We have another big volume day so far today. And remember, the majority of the volume comes at the end of the day. Volume on any chart or any stock, you can't see my volume bars. It looks like a smile when you put up the volume on just about any stock or index. This is the opening bell right here. There was yesterday's close right here. So there's the 4 p.m. line, 9:30 a.m. And you can probably just make out my volume bars. They're big there. And then they taper off. They pick up at lunch, or they bottom out around lunchtime, and then they start picking up in the final hour. So that gives you that. Well, I'm drawing it horrible, but imagine a big smiley face. And so this one, unless something happens today, they'll probably continue to ramp it in a close. We're already up almost 10% on the day right now, but it's just getting started. I don't plan to take any profits on this one anytime soon, unless NVIDIA craps to bed tonight, and that carries over into the stock futures tomorrow, and all my levels aren't taken out because I still need to see those near-term levels taken out. Coming up to 294 now. So let me wrap the video up here. Those are the things I'm watching. How to trade, how to trade it, how to protect yourself with stops wherever you want them. At this point, probably not much below that, and certainly not if we take out those lows. So you could have, there's a million ways to do it. Some people like tight stops. Just remember, in a volatile market, they're going to take you. They're going to get your stops if you run them too tight. But some people are just, day traders, scalpers going for little, half quarter point moves, half point moves in the futures. And that'll pad your pockets nice if you do it, often enough. And then others, I'm kind of morphing into swing trading mode right now, is what I'm getting at. So therefore, I'm allowing wider stops. All right, let's wrap it up here. Get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Have a great day.